There is a lot of volatility happening in the market right now, and I can tell you this is one of the signs before an economic recession that we see a lot of volatility in the market, and this is exactly what we are seeing right now. Okay, so we have received fresh GDP data from Stats Canada this morning, and according to that, the real GDP remains flat, 0.2% growth in the month of July. It was unchanged in June, and the preliminary data from Stats Canada saying that in August, it's pretty much unchanged as well. So the GDP, the economy is flat in Canada. Okay. Now, if you combine this information with what's happening in China, Chinese Central Bank, PBOC, they recently started stimulating the economy, their own economy. Okay, so they are buying their own stock. They are reducing the reserve ratio requirement for their banks, which means they're telling banks, okay, go out and lend more money in the economy. If you look at Chinese treasury yields, it's crashing like a rock. Okay, that tells you that those banks are not lending in the real economy. Otherwise, the yield should go up, not crashing hard like a rock. Okay, so when the yields crashing like a rock, that tells you that the big money, the smart money, is buying government debt versus lending in the real economy. Why? Because they see a massive risk in the real economy that they may not be able to recover their principal. Forget about the return. Okay, so when the yields are crashing hard, you know that the smart money is moving the capital from the real economy into the liquid assets and the safe assets like government debt. Okay, so you have Chinese government trying to stimulate the economy because they're seeing the economy is going into a deflationary bust. They're seeing a massive disinflation right now. On the other side, in the Eurozone, we're seeing the biggest economies in Europe, Germany, France, they're seeing a massive drop in CPI. So if you look at what's happening in France, their CPI reading came out for the month of September, 1.5%. And it was 2.2% in the last month. So a big drop in just 1 month. Inflation in Spain is 1.7% in September, drop from 2.4% a month ago. So you're seeing a massive drop in the inflation data in Eurozone. Now go back to the US. We just received the fresh PCE data, the Federal Reserve favorite measure to monitor the inflation, 2.2%. That came out 2.2% softer than what was expected. So you have a significant disinflation happening in the US. We're seeing similar trends happening in Canada. We're seeing Chinese economy is going into a deflationary bust, and their central bank is trying to stimulate it by reducing the reserve requirement and buying their own stock. You have Eurozone going into a massive disinflationary cycle. And if you look at the Fed CME watch tool, that tells you there is a 54% probability for a 50 basis point another rate cut. Okay, so what do you think Tiff Macklem is going to do in October? There's a good chance they can go with 50 basis point at minimum. At minimum, they perhaps can go 75 basis point. Who knows? Okay, it depends upon the next CPI reading and next unemployment data in Canada. And then when you look at the market, there is a massive volatility, as I mentioned. If you look at the bond market, the yield crashed like 1.5% in a day. So if you look at US Treasury yields, okay, the 2-year Treasury yield, it dropped 1.93% in a day. Okay, 10-year dropped 1.2% in a day. Look at Canadian bond market. Although Canadian bond market doesn't really matter much in a global monetary system, but hey, 2.8% down 2-year Canadian bond yield in a day. 2.5% 5-year bond yield, went down in a day. So there's a massive volatility happening in the bond market, which is typically not normal. Okay. And when we look at the equity markets, stock market all-time high, NASDAQ 42,000 points, S&P 5,700 points. Look at gold, almost reaching 2,700 an ounce. So take it what it's worth, guys. Okay, I am not always a doom and gloom. What I'm trying to do is giving you all the data points so that you can consider to make your educated decision about your own investing strategies. Okay, this is not normal. All these volatilities, it's not normal. Okay, I don't know which way the market will go. Okay, but my conviction is telling me that if we consider all of these data points that I just presented to you, China, Eurozone, US, Canada, and the oil market is also crashing down in terms of pricing, that tells you that there's not much demand in the global economy. The global economy is shrinking. Okay, we have these massive geopolitical crises in Ukraine and in the Middle East. Combining all of these factors will tell you there's a lot of risk in the market right now. It can go either way. But if I was you, I would be very careful in placing my bets, and I will always invest in safer assets, at least for now, until we come out of the other side. Anyway, you let me know what you think about that. Put your comments down below. Like this video, give me a thumbs up, subscribe, and I'll see you in my next video. Bye. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.